This is a lecture from OpenTuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
A third party which external auditors relatively frequently make use of is the internal auditors. And the typical uses that can be made here is that the internal auditors in a way spend most of their time reviewing and making recommendations and making reports on the operation of the internal control system. They can spend much longer on that. They can look at much more examples to see whether or not the controls are working thoroughly across the whole period. Observation of inventory counts. It might be very difficult for the external auditor to have enough staff, to go to 20 different locations at year end. And so maybe what happens is the internal auditor goes to 5 locations, kind of picked at random, and the external auditors go to 5 locations at random, and the internal auditors go to the other 15. Compliance with regulatory requirements. There can be a special audit rather than just looking at internal control. They can actually be asked by maybe the audit committee to go and make sure that the company is complying with all the rules and regulations that it must do to keep on the right side of the law. A review of subsidiaries that are not significant. We'll soon go on to look at group accounting and auditing the group financial statements. That if there are some subsidiaries which are clearly insignificant, then it's probably a waste of time for the external auditors to spend long on them. And again, reports from internal audit can be extremely useful to give us some comfort that things are probably okay. Review of IT controls. Again, a specialist form of internal control. But again, the internal auditors can really go to town on the systems, whereas the external auditors probably haven't got the time or maybe even the need to go into quite as much detail. You should notice a particular area where internal auditors are not to be relied upon by external auditors. That is work requiring significant judgment. So you never really, as an external auditor, you never be very happy about maybe getting the internal auditors to go through the inventory and to make a judgment about which elements of the inventory would sell at above cost and which have to be written down. Because there's too much perhaps opinion, too much discussion there, too much judgment there. And it's a dangerous area, therefore, and the external auditors should keep that for themselves. Again, like any use of an expert, using internal auditors does not absolve the external auditor of the ultimate responsibility for forming their opinion on the financial statements. And once again, the external audit report should not refer to any reliance placed on the work of internal audit. In order to rely on internal audit, we have to assess certain things about them. And first is their organizational status. If you had one internal auditor reporting directly to the finance director, it's going to be very difficult for that internal auditor to stand up, if you like, against maybe what the finance director wants. The finance director is probably responsible for giving that person their job, for giving them their pay rises, or giving them a promotion, responsible for not giving them a sack. Compare and contrast that with maybe a internal audit department where maybe there are 5 people, a fairly experienced internal auditor and 4 assistants who report to the audit committee. And the audit committee, we hope, has got no axe to grind. They're not trying to cover up frauds. They're not trying to cover up where there are improper internal controls and so on. These are matters which are potentially very embarrassing to the finance director, and the finance director will maybe put pressure on people. But the audit committee is essentially independent non-executive directors. There's no embarrassment attached with finding flaws in the accounting system. You want them to be members of a professional body. Being members of a professional body, again, can give you power, because if you feel you've been unfairly influenced or lent upon or bullied, you can, of course, ring up your professional body and seek advice. It also makes it a little bit easier that if you feel you have to resign, if the internal auditor feels he or she has to resign, if you're a member of a professional body with a qualification, you'll find it easier to get another job. Competence. Really what we're looking for in internal audit is what you'd look for in an external audit assignment. You want to make sure that you have the right resources, that people have the right skills to do that part of the internal audit. So if internal audit was looking at IT controls, they need expertise in IT controls, maybe specialist database knowledge and skills, or internet knowledge and skills if they're going to be doing that work properly. So resources, training, time, skills, and so on. Again, being a member of a professional body, maybe insist that they stay up to date and so on. Maybe they can go and ask technical advice from a professional body as well. And a systematic approach. Again, very much the way you would hope your external auditors behave. Remember, we had that way of remembering it's sacred, that we wanted our external auditors to be supervised. Similarly, internal audits. We want a proper assignment. We wanted competence and education going on there. We wanted their work to be reviewed. We wanted there to be good documentation and the like. We wanted ethics to apply to it. And just as you'd want all of that to apply to external auditors to give you a good, solid, strong external audit, similarly you want to see those qualities amongst your internal auditors as well. The steps you would take is you would discuss and agree what the internal auditors are going to do, and sometimes the external auditors may actually request them to do a particular bit of work if they think there's a risk in that area. There's going to be proper planning, execution, documentary supervision review, as we've said. We want to make sure that that is there, both within what the internal audit do, but also when the external auditors come to review the work, they have to review it properly and supervise it properly. We'll read and review the conclusions internal audit come to, and then we will look at the evidence, perhaps looking at the actual internal audit files and the documentation which they have compiled, to see if the evidence that they have collected is sufficient and appropriate, so that the conclusions of the internal audit, that a department is working properly, that the stock take has been done adequately, that the computer system is working properly, there'll be no breakdowns in control and so on. If that's what their conclusions are, it's up to the external auditors to make sure that the sufficient, appropriate audit evidence exists and could be asked for by them before they can place reliance on what the internal auditors have done.